Now let's. So see guys, we have seen the candles, single candles. Based on single candle can we take decision. Now there are single Japanese pattern we have seen, and likewise there is a double Japanese candlestick chart pattern. Likewise there is a triple Japanese candlestick chart pattern is also there. So we have seen the single Japanese candlestick chart pattern. Single means it is a hammer, hanging man, inverse hammer. So these are the single, means on a single candle you can take decision. Now let us understand the double Japanese candlestick chart pattern. So in double Japanese candlestick chart pattern, you will need it two candles to confirm the trend. Confirm the trade. You need it two candles. So first double Japanese candlestick chart pattern is the engulfing pattern, bullish engulfing. Okay, bullish engulfing में क्या होगा? In bullish engulfing, you will see prior trend will be uptrend, right? Okay, see, if prior trend is downtrend, okay, in downtrend you see a red marubozu type candle, okay, like this you see it, in if it is a downtrend, it is very easy to identify these candles. Firstly you will search for these candles, and you will find like you in downtrend you will find these candles, it is very common. Now the next candle you see a green candle, okay, this is a green candle. Wick doesn't matter. You just focus on the body. Focus on the red ka body and green ka body. If green ka body engulf 100% of the red body, it is a bullish engulfing pattern. Means this downtrend has over. It is saying that this downtrend has over. Now you can take a uptrend position. So this downtrend has finished, and bullish engulfing, this two, if you combine these two candles, this will tell you that this is a bullish engulfing pattern. It means this downtrend has over and you can take a upper side position. Okay, great. So so the point is that this body ka size should engulf the red ka size 100%. Okay, now if it is like this, na, if it is a downtrend and you see a red candle like this, okay, you see a red candle like this, but green candle is like this. Can you tell me this is a bullish engulfing pattern or not?
No, it is not.
Yes, this is not a bullish engulfing pattern because ग्रीन की बॉडी का साइज जो है रेड को 100% एनगल्फ नहीं कर रहा. इफ अगर आप ग्रीन को इसके ऊपर लेके आओगे, सो ये वाला पोर्शन बच जाएगा, नीचे वाला दिस पोर्शन विल रिमेन. सो इट शुड एंड इट शुड एनगल्फ 100%. मीन्स इसका जो ओपन एंड क्लोज है इसके ऊपर होना चाहिए. ग्रीन का ओपन भी ऊपर होना चाहिए और क्लोज भी नीचे. Like this candle should be like this, then it's a engulfing pattern. Okay, so this is a, you can ignore the big doesn't matter, only see the body. Green ka body
Sir,
should,
if both the candles are red, then
no, it's not a engulfing. The condition is first candle should be red, second candle should be
okay,
green.
okay. Then
Okay,
only it will be bullish engulfing.
then all it is a bullish engulfing and you can take a upper side
Okay,
position.
sir.
Like if it is a red,
Okay,
doesn't
sir.
matter. This is not showing anything. This is a red and this is a red. This is saying that this downtrend will be continue only. You are looking for a reversal when downtrend will over. Okay. Now, like bullish engulfing, there is a bearish engulfing pattern also. Same in bearish engulfing, if prior trend is uptrend, market is going up and you are looking for a reversal when this uptrend will over, so you have to first see a green candle, because it is very obvious that in uptrend you will see many green candle, this kind of green candle you see, and the next candle you see a red candle. So this is a bearish engulfing, and it should same likewise I told you in the bullish engulfing, it should engulf 100%. बॉडी का जो साइज है, you have to focus on the body size. Here green ka body, red ka body, you have to focus. We'll see on the chart also, will identify when this bullish engulfing and bearish engulfing. Are you getting me right? Bullish engulfing form
Yes.
will form on the top. Bullish engulfing will always form on the top. Then you can, and sorry, bearish engulfing will form on the top, and bullish engulfing जो pattern है, this will form on the bottom of the market. Yeah. Now we have seen the double candlestick chart pattern. Let's see the triple candlestick chart pattern. triple candlestick chart pattern. You will
Sharma ji, sorry, just to
yeah,
interrupt 1 minute.
yeah.
So here, do we need to validate volume as well?
No. Only based on the Japanese candles. We are saying that which pattern is the bearish engulfing, bullish engulfing. But volume will always, you have to look for the volume always. Volume is
Okay.
like extra. Volume is the extra mentality of the traders or buyers we are seeing. But based on a pattern, volume you have to always look for the volume also. But in candles pattern,
Mm-hmm.
if you want to classify that this is a bullish engulfing or bearish engulfing, you do not need to the you do not need to see the volume. But if you want to trade, if you want to invest your money, so definitely you will see the
Mm-hmm.
volume as well.
Okay, okay.
Yeah,
So in next step, just explain bit on the volume also, looking
yeah.
at the chart, so it will give more idea. Yeah,
Yeah, yeah,
thank you.
yeah. I'll tell you. Volume is like for to identify a fake or real trend. I'll tell you also that this is a real or fake. In the last class, have you attended the last class, right? Previous class. Have you attended my previous class?
No, sir, I have not attended, sir.
Yeah, okay. The volume concept I'll clear later. Okay, yeah, great. So now let's
Okay,
see the
sir. Sir,
triple.
and there are recordings of the last class now available.
Yeah, I'll send you. Yeah, you send me.
Okay,
Yeah,
sir.
I'll
Thank
send you. Yeah. So in triple candlestick chart pattern, what you will see, you will need a three candles. First condition, you have to search for the three candles or what the pattern in the three candles. So first triple stick candlestick chart pattern is a morning star. Okay, you have heard about this morning star. I'll tell you what a morning star pattern is. In morning star, okay, what you will look. So in morning star, first condition, your prior trend should be downtrend. In downtrend, you will look for a big red candle. Big red candle means like a Marubozu candle. Body side will be great. Should be bigger. So you first candle should be a red candle. Next condition is gap down. Next condition is gap down. Market should gap down. Then it's a morning star. Second condition is gap down here, like market open here, close here, and the next day you see a gap down. Okay, let's say market close here and you see a gap down and a spinning top. Third condition, your candle should be spinning top. Spinning top means body will be less and wick should be less. Like it's a very small candle should be formed in the market. Okay, your fourth condition is it should be red. It should be a green candle. Okay, it should be a green candle. First candle should be red, second candle should be spinning top, and third candle must be green candle, green marubozu type. Okay, I'm not telling you what is the size. It should break open or not. It should break red open or not. But it should move in the upside. It downtrend is like this, and it open here, and it is moving in the north direction. It is moving in the upper direction. So this pattern, if you combine these three candle, this is our morning star. And morning star means morning. It's giving a happy sign. This downtrend has over. This downtrend has over, and now next trend is uptrend. So this morning star is telling you that market correction is over, and now you are seeing these combination on red candle, spinning top, and green candle. This is a morning star pattern. So yeah,
Sir, I have a question. So morning star happens only in the morning when the market opens up, or it can
yeah.
happen anytime?
You yeah, like no, it cannot happen anytime. Because let's understand the gap down concept here. Okay, so let me go on the gap. What is a gap in the market? Gap down and gap up. So see, gap generally form in the market when there is a overnight news. Why gap are formed in the market? Like market start at 9:15, market close at 3:30, and let's say here like market close at 22,000. Now next day there is some overnight news. There's some financial result company announced after closing the market, or there are some USA news. There's something happen in the USA market. So on the next day you wake up and you see that this closing and opening. This is a closing different 22,000, market open at 22,500. So this is a gap up opening. Market on the previous day market close at 22,000. Next day you open the market 22,500. So this is a gap up opening. If I plot here, market open, close, and next day you see this kind of gap up in the market. So gaps up are generally formed in the daily candles. Gap up and gap down will form on the daily candles only. So you will not find the gap up and gap down on the 5 minute candle. Will you find the gap up or gap down in 5 or 15-minute candles? Market is continuously running. Okay, first 5 minute candle 9:15 to 9:20 candle has closed, and on this next candle will start at the simply at a 9:20. 9:20 it will end at 9:25. Next candle will open at 9:25 only, and it will close at 9:30. So will you find a gap up or gap down on 5 minute? it
No.
is it is next to impossible, because that whatever the closing price of 9 to at 9:20, it will act as a open price at 9:20 only. So on the 5 minute you will not find the gap up and gap down. You will generally found gaps in the market and the daily, weekly, monthly, and yearly. These time frames you will found the gaps in the market. Okay, and which gap will be bigger? Daily gap will be bigger, or weekly, or monthly? Bigger in size.
Monthly.
Yeah, actually, because there are more in the daily, only overnight news will come, only one night news will come. But in monthly, there is a lots of overnight news will come in the market. Okay, so in daily you will see the 2 days. In weekly you will see 2 days gap. Market close at Friday, and in on weekly you will see on the market open at Monday. So there is a 2 days gap. In these 2 days there are a lot of news coming in the market. So because of these 2 days, market can gap up more than the daily candles. In daily only there is a one night risk. Okay, and same as the monthly also and yearly also. So more time frame you will go, you will find gap up and gap down opening. So in these morning star you need a gap up, gap down. So these are the daily, on daily candles only you will find out this morning star pattern or evening star pattern. You will not find these patterns in the 5 minute candles. I hope is it clear to you. And just a gap theory also I want to explain. You asked me about the gaps also. Just remember, this is a gap theory, and it say market doesn't like the gap. Market does not like gap. If there is a gap pending in the market, sooner or later it will fill in the market. If you see a gap, market, this is a daily candle, open close, market open at 22,000, close at 23,000. On the next day market open at 24,000. No, let's say 23,500. There is a gap of 500. Okay, so this gap will sooner or later will fill. Market is going upside direction, but this gap is remain in market. This is a gap theory. Market doesn't like vacuum. It's like there is no trade happening in this zone 22,000 to 23,500. Whenever market will keep on, market will come to this level, and this gap will fill. So this is a generally a gap theory. Based on gap theory also, people try to identify the trend of the market. Okay, so this is a gap theory 23,500. So this gap will sooner or later try to fill. Market will trade in this zone, and this gap, it cannot be like this, that this gap is remain unfilled. It will fill either 1 month, 2 month, I don't know the time frame, but gap theory says that this gap will try to fill, this gap will fill in the market. So like market cannot directly go, कभी ना कभी ये गैप आपका फिल हो जाएगा. If it is a general gap, if it is like a breakout or breakdown, it is like you can say that this might not be filled. But if it is a general gap due to news or some USA, like something is happening on the market on the overnight news, so if it is a general gap, this gap will sooner or later fill. Okay, so try to identify gaps in the Nifty. So this is a task for you. See, there is a gap on the Nifty, or that is remain, this is remain unfilled. So in this downtrend, it may fill. Okay, I hope it is clear. So next triple candlestick chart pattern is the evening star. So likewise in morning star, we'll see a evening star. Okay, so yeah. So in evening star, what you will see, evening means it is not a good news. We are on a bad news. So in evening star, we will see the market will reverse. So first trend should be your uptrend. In uptrend, you need to identify three candle. First candle should be green, because it is very obvious in uptrend you will find a green candle, green Marubozu type candle. And second condition, first condition is green candle, second condition is gap up. Market should form a gap up. It open here, okay, it open here, close here, and on the next day you see a close, you see opening is more than the closing, so this is a gap up opening. In the gap up opening you find a spinning top candle. Okay, this candle should be the spinning top. A spinning top simply means body is very less and wick is very less, so this is a spinning top. And what the third condition should be, you will find a red candle. You have to see the red candle. It open here, doesn't matter. You just need to see that this candle, after opening, it is moving in the downward direction. Okay, it is moving in the southward direction. So if it is a red candle, so either it open, it either it close here, either it close here, it close here, doesn't matter. Matter is that open here but it's moving in this direction, then it's a evening star pattern. These, if you combine these three candles, so it is forming a evening star. This is a evening star. Evening star means it is saying that it is taking you the bad in the market. This uptrend is going to, or sooner this uptrend will continue in the downtrend. This uptrend will reverse. Okay, this form a downtrend. Okay, so I hope is it clear to everyone? And any kind of doubt? Yeah.
So
Are
the
you guys?
evening star also in the beginning of the market when the next day.
Yeah, yeah. These three, the evening and morning star needs daily candle. On the daily candle or weekly candle, you can identify these patterns only, because you need gap up and gap down.
And what's the time frame to identify this? Like 9:30 to 9:15 to 9:30.
Time frame, like these do not have anything related to time frame. You just need you just like put a daily candle on the daily candles. If you are doing the analysis on daily candles, on the daily candle you see these patterns of weekly, monthly. So these pattern will be fine on the daily chart pattern, or weekly, monthly. On mint on on a lower time frame, like minutes or second or hourly, on this time frame you will not see these patterns. So this time frame analysis, like multi, this is called as a multi time frame analysis. So we'll do multi time frame analysis, but these Japanese candles has nothing related to time frame. You can identify, like these time frames are very different. This time frame, a trader is do, if it depend on the what kind of trade you are doing. If you are doing an intraday trade, or if you are doing a short term trade or long term trade, then you have to choose your time frame. Okay, this will tell you the like what kind of trader you are. So time frame, multi time frame analysis will do later. I hope is it clear, right?
Yes.
Yeah.
Yeah,
So
yeah, Sharma, it's clear. Just one thing. Are you going to show us in the system also? Means that is technical.